Intraday trading is exciting. It's fast-paced. It offers the potential for quick profits. Intraday trading involves buying and selling within the same day. All positions are closed before the market closes. Traders capitalize on small price movements. They aim to ride the waves of price fluctuations. Their focus is on short-term price movements. It demands quick thinking and decisive action. With the right knowledge, it can be rewarding. Imagine sailing without a map or building a house without a blueprint. That's what trading without a strategy is like. It's crucial to have a well-defined plan. A solid trading strategy outlines your entry and exit points. It helps you manage risk, and it provides a structured approach to the markets. Your strategy should align with your trading style and risk tolerance. Some traders prefer high-frequency trading, executing numerous trades rapidly. Others focus on a few well-timed trades. There's no one-size-fits-all approach. Before diving into live trading, backtest your strategy. Use historical data to see how it would have performed in the past. This helps you identify potential flaws and refine your approach. Remember, trading involves real money, so it's essential to test your strategy thoroughly. Think of your trading strategy as your roadmap to success. It guides your decisions and helps you navigate the complexities of the markets. With a well-defined plan, you'll be better equipped to handle the challenges of intraday trading. Scalping is like a cheetah hunting its prey, swift and decisive. It's a high-frequency trading strategy. Scalpers aim to profit from small price changes. They make numerous trades throughout the day, holding positions for short periods. Imagine a scalper trading a stock. They might buy 1,000 shares at $10 and sell them quickly at $10.02, making a $200 profit. They repeat this process multiple times, capitalizing on small price fluctuations. Scalping requires a keen eye for market trends. It demands quick reflexes and a deep understanding of order book dynamics. Scalpers rely on technical analysis, using charts and indicators to identify potential trading opportunities. While potentially lucrative, scalping is not for everyone. It's a high-pressure strategy that demands focus and discipline. It's essential to have a robust trading plan and to manage risk effectively. Momentum trading is like surfing. It's about identifying a strong wave, a trend, and riding it for as long as it lasts. Momentum traders capitalize on the tendency of price trends to continue. They look for stocks or other assets experiencing significant upward or downward movements. Imagine a stock breaking out to new highs on strong volume. A momentum trader would aim to buy the stock early in the trend. They would ride the wave of buying pressure, hoping to profit from the continued upward momentum. Momentum traders use technical analysis to identify trends and potential entry and exit points. They look for indicators like moving averages, MACD, and RSI to confirm their trading decisions. Momentum trading can be highly profitable during strong trends. However, it's crucial to have a clear exit strategy. Trends can reverse quickly, and failure to exit a trade at the right time can lead to significant losses. Section 5. News trading, capitalizing on market-moving events. News trading is like being a journalist, but instead of reporting the news, you're trading on it. It involves reacting quickly to news events that impact the financial markets. These events can include economic data releases, company announcements, or geopolitical developments. Imagine a positive earnings report for a company. A news trader might buy the stock immediately after the announcement, anticipating a surge in price. They aim to profit from the short-term volatility created by the news. News trading requires staying informed about current events. Traders need to be able to quickly assess the potential impact of news on asset prices. They rely on news sources, economic calendars, and social media to stay ahead of the curve. News trading can be highly profitable for those who can react quickly and decisively. However, it's crucial to be aware of the risks involved. News events can create significant market volatility, and it's essential to manage risk effectively. Section 6. Understanding risk management. Risk management is the heart and soul of successful trading. It's not about avoiding losses altogether, that's impossible. It's about minimizing potential losses and protecting your capital. One key principle is to never risk more than you can afford to lose. Determine a percentage of your capital that you're comfortable risking on any single trade. This is often referred to as your risk per trade. Another crucial aspect is setting stop-loss orders. These are predetermined prices at which you'll automatically exit a trade if it moves against you. Stop-loss orders help limit your potential downside. Think of risk management as your safety net. It's there to protect you from major setbacks. By managing risk effectively, you can trade with more confidence and increase your chances of long-term success. Section 7. Setting realistic expectations. Many new traders enter the market with dreams of quick riches. While intraday trading offers profit potential, it's essential to set realistic expectations. Remember, trading is a skill that takes time and effort to develop. Don't expect to become a millionaire overnight. Focus on learning the ropes, refining your strategy, and gradually improving your trading performance. It's also crucial to understand that losses are part of the game. Even the most successful traders experience losing trades. Don't let losses discourage you. Instead, view them as learning opportunities. Analyze your mistakes and adjust your approach accordingly. Setting realistic expectations will help you stay grounded and focused on your long-term trading goals. Remember, consistency and discipline are key to success in intraday trading. Common pitfalls and how to avoid them. Intraday trading is fraught with potential pitfalls. Let's highlight common mistakes and how to avoid them. Overtrading, quality over quantity. Don't feel pressured to trade constantly. Wait for high probability setups. Chasing losses. Stick to your plan. Never increase your risk to recover losses. Risk management. Define your risk per trade. Set stop-loss orders for every trade. Don't let greed cloud your judgment. Markets are dynamic. Continuously learn and adapt. Be open to new ideas. By avoiding these pitfalls, you'll navigate intraday trading challenges better. Section 9. Essential tools and resources for intraday traders. Equipping yourself with the right tools and resources can significantly impact your trading performance. Here are some essentials for intraday traders. A reliable trading platform. Your trading platform is your command center. Choose a platform with a user-friendly interface, advanced charting tools, and real-time data feeds. Many reputable brokers offer robust trading platforms. Charting software. Intraday traders rely heavily on technical analysis. Invest in charting software that provides a wide range of indicators, drawing tools, and customizable chart layouts. Market data feed. Access to real-time market data is crucial for making informed trading decisions. Your broker should provide a reliable data feed that includes real-time quotes, charts, and news. Economic calendar. Stay informed about upcoming economic data releases, central bank announcements, and other market-moving events. An economic calendar can help you anticipate potential trading opportunities. These tools and resources will provide you with the information and insights needed to make informed trading decisions. Remember, knowledge is power in the world of intraday trading. Section 10. Getting started, a step-by-step guide for beginners. Embarking on your intraday trading journey can feel overwhelming at first. Let's break it down into manageable steps. Educate yourself. Start by building a solid foundation of trading knowledge. Read books, take online courses, and follow reputable trading blogs. Choose a broker. Select a reputable broker that offers a user-friendly platform, competitive fees, and excellent customer support. Ensure they provide access to the financial instruments you're interested in trading. Start with a demo account. A demo account allows you to trade with virtual money. It's an excellent way to practice your strategies, get familiar with the trading platform, and build your confidence before risking real capital. Develop a trading plan. Define your trading strategy, risk management rules, and profit targets. Write down your plan and stick to it. Start small. When you're ready to trade with real money, start with a small amount of capital that you're comfortable risking. As you gain experience and confidence, you can gradually increase your trading size. Remember, trading is a marathon, not a sprint. Be patient, stay disciplined, and focus on continuous learning and improvement. Section 11. Conclusion, rewards, and challenges of intraday trading. Intraday trading, with its rapid-fire decisions and potential for quick profits, can be both exhilarating and demanding. It's a journey paved with potential rewards and inherent challenges. The rewards can be substantial. Successful intraday traders have the opportunity to generate significant profits by capitalizing on short-term market movements. The flexibility it offers, allowing traders to work from anywhere with an internet connection, is another attractive aspect. However, it's crucial to acknowledge the challenges. Intraday trading requires dedication, discipline, and a constant thirst for knowledge. The learning curve can be steep, and losses are an inevitable part of the process. The pressure to make quick decisions in volatile markets can be intense. Ultimately, the decision to pursue intraday trading rests on your individual goals, risk tolerance, and commitment to mastering this demanding craft. If you're willing to put in the effort, learn from your mistakes, and persevere through challenges, intraday trading can be a rewarding and potentially lucrative endeavor.